What's up everybody, welcome to the Stocks channel. My name is Corey and today in the stock market we continue to get mixed signals, but overall it still looks like the tech sector is having a successful breakout and could be leading us for the next leg higher. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in SPY we were down about 0.24% and we did get the second day closing below that support at 380. So this is going to be one of the mixed signals where we obviously are breaking down through a very critical support. But remember I told you below 380 we would likely come down to 370. And it does very clearly look like we did see buyers at 370. So again, we are getting a little bit of mixed signals, but we are seeing buyers of the dip at support and we are starting to see an increase in volume. So overall, an increase in volume is going to be a good sign that we're breaking out of this consolidation and getting ready for that next leg. Now, if you think back to a couple of weeks ago, I said one of my preferred scenarios was this ABC down, and I did want to see this leg lower as a possible bear trap so that the bulls could recruit some of those bears as bulls as they get short squeezed to go battle the big bear. This is the scenario that I preferred because it is the most likely scenario for the bulls to successfully beat the bear. If you just think about the psychology of trading, there are going to be a lot of people that are becoming bearish during this next leg lower because all they can see is what happened in the rear view mirror of this epic bear market rally lower, and they're thinking this is going to be the next bear market leg lower and that we're going straight down to 350 or at least closing that gap at 369. So it would not surprise me in the slightest if we just saw the low before the next bull rally, because there is still that gap down there and we are clearly seeing buyers above that gap. So if you are still bearish at this point in time, it is very possible you just got bear trapped. The good news is you're going to know very quickly if you got bear trapped because we need to see SPY accelerating off of this low and breaking back above 380. And then the bulls will have the advantage of a positively sloping 20 simple moving average. We will have the higher low from the low back there around 364. And then we will have the momentum to short squeeze the bears that got caught with their pants down, turn them into bulls as they become short squeeze rallies, and then slice right through that gap up there at 401 and likely retest that high just below 418. So it is a very real possibility that this was the bear trap needed for the bulls to recruit those short squeezing rallies to get up there and close that gap. Now you'll know right away if it's not a bear trap because we'll slice right down through that support at 370 and start trending down towards that target at 350. So what I'm trying to summarize here for you is that you need to be using the risk level at 370. And while we are above 370, it is very likely this was just the bear trap day before we go higher. And if we break down below 370, it is very likely that we're going to 350. Now, when I get to the tech sector, I'm going to talk about why I think it was a bear trap because I know SPY looks a lot more like a mixed signal, but when we get to the triple Qs, you will see it's a lot more clear on why today was likely a bear trap. So just pay attention while we are seeing increasing volume. You will want to pay attention to the price action very closely because increasing volume price action is going to give you the most accurate read. And right now you can clearly see from the candles that bulls are buying the dips and we are rallying off the lows. And you can see how clearly that we're getting a lot of these green candles, and that is not what you're going to see in a strong bear trend. Just think about it. If the bears were strong, they should be slicing through all of this support by now on high volume selling, and we are just not seeing that. We're seeing strength in the bulls and strength in the buyers coming off of very critical support levels. And so far we are seeing support holding up, which is a completely different picture than what we saw back in May, where we were just slicing down through support levels like they weren't even there. So don't ignore these warning signs because it's very likely you're going to get caught on the wrong side of the trade if you continue to try to short the hole. So jumping over to the NASDAQ 100 triple Qs, you can see why I have a lot more bullish emphasis on the tech sector breakout because you can clearly see the tech sector broke out for the resistance trend line, came back down to the resistance trend line to test it as support, and we now have 2 consecutive days in a row bouncing off of that retest. And we are back above a positively sloping 20 simple moving average for 2 days in a row. All of this is happening on increasing volume from the previous consolidation phase, and we have clearly broken out of the wedge to the upside and had that successful retest. The Bollinger Bands are very tight and very squeezed, so the bulls have plenty of power to push this higher if they get the bull breakout, which at this point is going to be the breakout above 287 and then above 297. There is the gap to fill at 299, but I think a lot of the bears are going to retreat to the previous high right around 315, and only the bears that don't see the bullish patterning developing are going to try to short at these resistance levels, which means they will get squeezed. They will lose on that trade as they become net buyers to cover their short positions, and that should lead to a very impulsive rally to that resistance. Just like on SPY, you know exactly if this setup is not playing out because we'll start closing down below about 284 to 282, and then you can bail out with a small loss and get ready for that next leg lower at 258. But right now, I do think it's more bullish than bearish, as you can clearly see with the chart, with that long-term consolidation phase starting to favor the bulls because the bulls now have plenty of support, and you can draw a horizontal line from today's price that goes all the way back to early May. So that does tell you the bulls have successfully neutralized the bear trend, and now they're working on building up the bull trend. Remember, the bulls have to go against a very strong bear trend, and that is why this is taking so long, but it clearly shows that the bears have lost their momentum and they are allowing the bulls to hang around way too long, which is going to lead to the bulls trying to do something crazy like blasting through 300. So don't mess with the crazy bull or you'll get the horns, so be prepared for this bull rally as long as we're above the 282 support level. On the Dow Jones, we were down 0.44% as the Dow Jones came back down to the top of that gap and did find support right around 301. So you're seeing a very similar setup as SPY with that ABC pattern down that has not taken out the previous low, and we are getting buyers of the dip as we get those gap down opens. So the Dow Jones is likely going to be a very similar story as SPY, where you're going to know very quickly if you're wrong because we're going to slice down through 301, come back down to retest the low at 297, and if we break that low, the next price target is at 285. But if this is the real deal bear trap, this was all just a trap before the next impulse higher. So you can get a lot more bullish in the Dow Jones when we start getting back over 309 and then back over 311. If we get that bull breakout back above our resistance trend line, we'll very likely go up there to fill the gap at 323 and then retest the previous high at 333. So be prepared for either way, but right now it does look possible that these are all bear traps before we start on that rally higher to go close the gaps to the upside. In the Russell 2000 IWM ETF, we were down 1.03% and we did close just below 170, but we are still above our support trend line support, which is right around 169. The bulls need to get back over 170 as soon as possible, otherwise we're very likely retesting this low at 164, and if we break 164, your next leg lower will be at 156. You're getting a lot more bullish if we can get back over that 20 simple moving average at 171 for a retest of resistance at 175, 178, and then the bull breakout above 179 should take us up to close the gap, and that price target is at 183.5. So pay attention to this possibility of this all being a bear trap before the next leg higher, and your risk and reward is very well defined if you're a bull because you are sitting right on top of support, so you know very quickly if you're wrong and can exit for a very small loss. On the ARKK ETF, we were down just over 2% today as ARKK continues to consolidate around that support zone at $42. And it will take a breakdown below 42 to get ARKK moving down for the next leg lower. Previous support will be right around $40, and below $40 look for a retest of 36.5 or that next leg lower at 33.7. The bull breakout is on a breakout above 47, which should easily send us back up to 52. And if we get 2 consecutive closes above 47, we will have the bull trend in ARKK. On the VIX, we were down about 1.5% as we continue to see the VIX getting crushed, and you can see very clearly that there are very tall wicks on the VIX, and we continue to close near the low of the session on the VIX, right on top of that support trend line. So if the bulls are going to push higher, you're going to continue to see the VIX getting crushed back down below 26 to come back down to 24. And if the VIX closes below 24, we will very likely have a bull trend. In the bear market scenario, we're going to see the VIX spike off support, close back above 30, and that should tell us we're getting that bear market volatile leg lower to the lower price targets. But right now, it clearly looks like the VIX is in a downtrend, and we are seeing the VIX getting crushed when it tries to break out above 27. On Bitcoin, we're currently up just over 2%, and Bitcoin is back over the 20 simple moving average, but we have no major breakout in either direction. This is very simple on Bitcoin. You're getting bullish above 22,000 for a retest of 25,000, and then above that, you're going back up to 28,000. You're getting more bearish on a breakdown below 19,000 for that price target lower at 12,000. But if this is a double top, you can easily expect Bitcoin to at least get to about 16,000 if we do break down. Everything in between is just a trading range, so buy off support and sell at resistance and then get ready for the breakout move. On NVDA stock, we were up 1.37% as NVIDIA came back up to the resistance trend line right around 154, but did not close above it. As you can see, we still have the bear trend and we still have the lower highs and lower lows, but in the short term, we possibly are building a higher low if we do get the bull breakout. The bull breakout at this point will be back above 155 to 157, and then above that, we need to close above 161, and we will have the bull trend in the short term with the higher low and the higher high. So on NVIDIA, you can get a lot more bullish on a break above 155, and if we break above 161, look for a retest of that resistance right around 172 to 177, and we do have a gap to fill right around 180. If we break down to the downside below 145, it's still possible while we have the bear trend that we're trending down towards 130 or 125. On Tesla stock, we were up about 0.5% today as Tesla continues to close over that support at $700, so we are clearly seeing buyers at that level. Below 700, look for a retest of the bottom of the channel right around 654, and if we lose 654, we're coming back down to 620, and the next leg lower below 620 is at 571. As long as we're above 700, we could be coming back up to retest 745. And if we get the bull breakout above 745, the next critical resistance is just above at 775. Whichever direction we break out of this consolidation wedge will set the trend for Tesla. So get a lot more bullish if we break out to the upside and get a lot more bearish if we break down to the downside. On Apple stock, we were up over 2% today, and Apple is clearly the leading indicator on why I think the tech sector is leading the way higher in this next breakout. As you can clearly see, Apple is looking extremely bullish, back over all the moving averages, has the bull trend of the higher low and the higher high, and coming straight up to test that resistance at 150. Apple above 150 will likely send us all the way up to 174, but it is possible we do some type of inverse head and shoulders and build the right shoulder out once we get to 150, which is the neckline. But overall, this is a very bullish setup in a market moving stock that has a lot of market weight cap in SPY and the triple Qs, so there is no way you should be getting overly bearish while we are getting a tech sector breakout and Apple is looking this bullish. Strong support on Apple now is right around 145 to 146 and down here right around 142. And as you can tell, there's a lot of bullish momentum pushing Apple stock higher, and it's all happening on increasing volume. On the financial sector, we were down 1.91%, and we did close just below support at 30.8. So that is definitely something that is a warning sign that you need to pay attention to. And we do have a lot of bank earnings tomorrow pre-market, so we could see a very volatile move in the financial sector. The industrials were down 0.57%, coming back down to that support right around 85. And if we do break that support, we'll very likely go down and fill the gap below. The healthcare sector was down 0.29%, bouncing off support and closing just above the 20 simple moving average. So it does look like this is going to be a pullback before the next leg higher, with that critical resistance just above at 131. If you look at the healthcare sector, it looks like it could be also forming an inverse head and shoulders, so this could be building out the right shoulder before the bullish breakout. The energy sector was down 1.89%, bouncing off that support right around 66, and if that support fails, you're looking for the next leg lower down there to be right around 63. Keep in mind the energy sector coming down is where a lot of that inflation is coming and the market does look forward. So even though we did have a high CPI print, you can clearly see energy prices and oil prices are coming down. So jumping back over the S&P 500, we can see oil prices and energy prices are coming down, and that is why the market is not selling off on that CPI data. The market never looks backward, it never looks in the rearview mirror, it is always forward looking, and it is very efficient and can price in everything. So just because you're getting these bad news events doesn't mean the market is going to react to them, because the market already knows what it's dealing with and has likely already priced in a lot of the scenarios. So that is why we follow price action and not noise, and right now price action is giving mixed signals, but overall it does look like the tech sector is getting a bullish breakout and leading the way higher. So right now I think you have to give more edge to the bull side, which means this is very likely just going to be a bear trap setup before we go battle the big bear. We've been talking about the bear trap setup to battle the big bear for 2 weeks now, and I think the time has finally come and we're finally in that position where the bulls are going to start pushing. So be prepared and don't be surprised if you see a bull rally in a bear market. Bear market relief rallies are completely normal and they're usually double digits. That doesn't guarantee the bear market is over, so bears, you can cool down. Calm your jets a little bit. It doesn't mean we're getting out of the bear market. It just means we could go into a short-term bull rally and put in the next lower high before the next lower low. So follow price action, have a plan, and be prepared no matter what happens from here, and always use great risk management. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of this video. I also have the Stocks channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks channel trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.